The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and I just want to welcome you guys out to this Tuesday, April 21st, of what's hot and what's not. Obviously, the markets have been a little bit crazy. Yesterday, we actually, for the first time in history, saw a negative chart. If you guys were following oil yesterday, and I'll explain it a little bit today, just to make sure everybody's kind of understanding what happened. I got a lot of questions and a bunch of emails yesterday about, oh my God, what's going on with oil? Like, how is this possible? And actually, yesterday, with it being negative, it was kind of at a point where they were paying you to take the oil. There was so much supply. So absolutely, I'll go over that. I'm not going to break down any trades in oil, and I'll actually show you a chart and explain kind of why. Again, I'll give you a better understanding of that, and that'll be at the end of the analysis today. But before we begin, let me just jump into the kind of standard who I am. So for the new people here, you kind of have an idea of where I'm coming from with my opinions and that kind of stuff. As I mentioned, I'm the president and CEO of Keep Trading Simple, and my trading style is a lot different than a lot of people. I keep things at the very fundamental, kind of basic level, try to keep things as simple as possible. And I find that people overcomplicate things a lot. So when you see my charts and you don't see indicators all over the place, you'll know why. I'm a price action trader. I believe in supply and demand, and I really kind of focus and dive in on that. But they're pretty simple, right? I've been trading basically since about 2000 time frame. So I've seen ups, downs, 3 different crashes in the markets. I've seen a bunch of different craziness, traded many different assets, traditional options, stocks. I can trade futures, but I don't like them. It's just too many moving pieces, and I just don't find a need to. I'm a big currencies trader, and then when I found binary options, it was one of those things that I knew immediately I needed to add this arrow to my quiver as far as trading goes. Taught a number of different classes. You guys may know my name from the 30-minute trader that I created a few years ago. I still have that out there. I've created a 5-minute binary course. That was actually one of the things that I was giving participants away last week. I'll give you guys an update on that giveaway as well. And then I have, obviously, again, we have this brand new high volatility trading course that I haven't added to this. And I actually do weekly breakdown newsletters as well. So I was an advisor for one of the big 3 banks a couple years back. And it was very eye-opening for me because I started off just like all of you out there today. I was a retail trader. Really kind of like, what do? I purchase education. I looked online. I try to do it myself. I believed in the school of hard knocks and, whatever my losses were. And again, kind of did all the things the wrong way. And then I thought it was a great opportunity to go on the inside and see how it was done behind the scenes. And what I learned is that they don't have any more information than we have. And just because you have a Series 7 and some of these licenses doesn't really make you any better of a trader. We actually never looked at charts in any of my trading. In my office, some of the most tenured guys there would ask me to look at a chart for them, and I thought it was just crazy, right? Left that industry because I wanted to teach, and I absolutely love teaching. Without a doubt, it's my passion in life. I enjoy teaching people and helping, change people's lives. So that's why I do these webinars. Again, I focus on my students typically at night, and I'll do these. I've traveled around the U.S. helping people, gone to Canada. That's actually where I met my wife. My sons, I should update. My sons actually they turned 10 on Sunday, this past Sunday. So now we have double digits, and the little one, she's going to be 2 in about a month. So lots of fun, lots of stuff going on. And again, I try to stay as busy as I can. But that's who I am as a trader. I'm not only a trader, but I'm a dad. I love coaching lacrosse for my kids. So remember, guys, it's not all about sitting in front of a computer. It's about what you're using the computer time to do on the outside. Don't forget that. Let's cover the disclaimers real quick, and then we can jump in. So trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to enter the transaction, including fees. The information presented within this presentation is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And we will actually cover all 3 of those today. And Nadex is a registered trademark of the IG group. All right, so with that being said, let's go through today's agenda. First things first, I want to make sure that we cover the news events for the week. Now, this week is actually one of those weeks that I would call an anemic week. We don't really have a whole lot of news until late in the week. And even then, it's really just one day of manufacturing PMI, which is one of those data features that it's more based off of kind of overseas. I mean, there's a lot more overseas data. It doesn't affect the US markets as much, but I'll just cover it for you real quick. And then what we'll do is we'll jump into the indices. The indices are a bit crazy right now. But we will cover the indices. We will cover a brief section on Forex, and then we will cover commodities. Again, I will cover oil and kind of what happened yesterday and is happening today, just to make sure that everybody feels well educated about what's the situation, because I feel like the way that the news presented it was incorrect and kind of misleading. Okay. And then last, I'll give you, again, we'll give you guys an update on the COVID-19 assistance code. There's actually a few codes left. So I will give you guys, if this is your first time attending, good for you. My COVID assistance is I'm going to give out some free classes. We gave a bunch of them out last week. I'm glad that I gave out more than what I had originally planned. But there's a couple left you guys can have this week if anybody still hasn't gotten one. And I do want to thank everybody right off the bat. Nobody went in and tried to get two. Everybody got one. So I'm glad that everybody was good with that and sharing. All right. So let us go over and let's just dive right into the chart. So first things first, I said that we are going to cover the, let's go cover news first. So let me drag this website in. There are many websites, guys, you can use. This is one of them that I use, Forex Factory. You can use Daily FX. They also do an excellent job presenting the news. This is just one I happen to have up, and it's easy for me to kind of scroll down real fast. So first things first, again, these times are set for my Eastern Standard Time. If you do not live on the East Coast, these times will be slightly different, and you guys can adjust them accordingly. But you can see as far as the week goes, Tuesday, not much. Wednesday, we have crude oil, which would be an interesting number to kind of look at, but not a whole lot. And then Thursday is really Thursday, Friday are the big days this week that we need to worry about. Today is pretty much over as far as news goes. And like I said, tomorrow, the only really big U.S. news we have is the oil inventory report. And that will be interesting to look at to see where oil is potentially moving tomorrow. And really, at this point, to see what the supplies look like. How much surplus do we have right now? I mean, I know we're basically out of space, and I'll cover that in the oil section, but what do the supply numbers look like? So that'll be tomorrow morning at 10:30. Thursday, you can see we have a bunch of European data, right? And then look at this. Look at this. So this number right here, the unemployment claim on Thursday, we've had some astronomical numbers, but last week we actually missed. It was less than the forecasted number. Now, for a couple of weeks, we've been talking about this, and I mentioned it. They were adjusting up, and last week they started at 500,000, and then they adjusted it to that 5350, but they adjusted too high. They missed. This week on Sunday, this was actually 500,000 again, but they've adjusted it down to 45. So the big question I have for you is, and again, you may not follow this number, has the worst been in? Have all the people that are going to lose their jobs, are the new numbers coming down now? Has this bottomed? So this is a very important figure to look at on Thursday. If you guys are not looking at this, you need to get in there at 8:30 in the morning, look at this unemployment claims number and see what we have going on. Because this has been the doomsday number for Thursday, but last week we over-exaggerated. So, and now the forecast is even lower. So that's going to be a big number on Thursday, followed up by manufacturing PMI. And again, PMI is, you don't have to know what the numbers are. Again, the market kind of adjusts for these things. If you have a question, you can always click on it and it'll kind of go in here. But the important thing is talking about it's whether the industry is expanding or contracting. And obviously we were contracting, which everybody, no surprise there. It's just to what level. And again, a lot of European numbers. Friday, we do have a little bit of US numbers. We have core durable goods. Again, you don't have to know what core durable goods are versus durable goods. Just understand that the markets are pricing in data, right? There's a forecast, and it's supposed to be bad. It's supposed to be worse than before, and the market has already priced this in. If these numbers come in worse, the market will adjust. If they come in better, the market will adjust. If they come in exactly as expected, which doesn't happen that often, I mean, I can click it here. You guys can see in the last year, they typically are wrong. More times than not, they are wrong. Going back to February, and in fact, I can go back a little farther. Going back down to December, right? So this year, it's only been correct, or more or less correct, twice, right? So, yeah, it's wrong a lot. So the market typically needs to adjust. So that could be trading opportunities on Friday morning. So make sure you get in there, check those out. So that's really news for the week. Like I said, not a lot front week. Most of it is back end for the week. All right, so let me drag this out. And let's start with the indices first. All right, so let's start over with NQ. So NQ for me has been probably the most reactive during this whole crisis. Now you can see the NQ has done something that the other two, the S&P and the Dow, have not been able to do. Okay, there's a gap that was formed here back on March 6th. It was actually able to go above quite higher, but then ran into an area. And we've marked this area off a few times. There's no need for me to mark it again and show you guys that it turned right on that area. Again, that's understanding price action and being able to read candles. But you'll see that prices turned down, and we've had 3 pretty good days to the downside. Today is kind of an extended range day on this one. Now, dropping down to 4 hour, the question is, what's going to slow this down to the downside? Okay. As you guys know, typically what you're looking to do is whether you're going short or you're going long, you're always looking for pullbacks. And you can see there's been some, there's been some pullbacks here. If you guys are wondering what the green and the red is, just in case, I have my indicators on here right now, and these are just pulling areas of supply and demand. It's an algorithm that I have for my students. But you can see we've had some opportunities in here where prices pulled back, it's pulled back, it's pulled back, and now it's starting to crash down. Now, although the indicator is not grabbing things, there's a couple areas in here that I need to kind of watch out for. One is this area right here. And again, we've kind of broken through this now. Let me actually change this to a different color. Actually, I'm going to have to do it on. You guys should be able to see white. So price is crashed into that zone now, and it's kind of holding. Okay. Now, an area that I'm watching for, kind of where it could potentially stop. This was one, but there's an area sitting right below, and these are two kind of areas that I'm looking for. And again, that's what you can see right now. We've kind of bounced out of it. The reason why is because if you look a little bit lower, one of the things that we see a lot of times, and it doesn't matter if you're a support and resistance trader or if you are a supply and demand trader or a lot of other strategies, a lot of times areas that used to be areas of buying flip and become areas of selling. Okay, so this was an area that was saying, hey, listen, in your shorts, you need to get out of your positions before we get down to an area where buyers are stepping in. Now, this first one was not as clean. This is a much bigger kind of push out, and you can see what happened. Price kind of bounced down, hit that level, and is now basing. So for me, what I'm looking right now is, hey, listen, if this starts to find some sellers here, could we have a potential short? I need to know where I need to put my risk levels in. So I'm kind of looking at these two levels saying, hey, listen, if this starts to push lower, I'm going to be using one of these two levels as my risk level to know when I'm actually wrong, okay, to the downside. And looking over here, there's a little bit of buyers in here. Let's see on the 30-minute if we see much. Let's pull this off. No, you see there's not a whole lot. So one thing I'm looking for right now in the NQ is if we can start catching some sellers in here, there's an area of here that there's some potential opportunity for some profit. So it may not happen today. It actually may be a tomorrow thing more than anything else. To see what the reaction is off that level. Whoops, I ended up deleting one of them, but that's okay. It's not the end of the world. It was sitting up there. But this is the one I think we need to focus on. So it's one of the things that I call is a Harry Potter trade for my students. You may have heard me talk about it on here. It's a momentum breakout. It's when we break through the zone, we use the zone as risk, and then we take it short. I don't really necessarily see anything positive right now in here that says, hey, listen, I'm getting ready to go long, particularly in the upper time frame. You can see a little bit of a hand mark zone, but nothing really super explosive till down here. So it looks like this one wants to continue back to the downside. S&P, okay, S&P, let me go back up to the daily so we can get some fresh data. You can see as well that this one did come off a zone and it did turn, and we marked this off last week, right? You guys can see that this came pretty handily back to the downside. Kind of the same idea. It has pulled back. It's given us a few additional entries. Now, this one is a little bit different situation. It's not broken all the way through that zone, but the indicator has marked it off. Now, one of the reasons why I like this indicator, and again, I can draw zones all the time, is it's using actually an algorithm to determine how it entered the area and how it left the area. This shows me that it's probably a pretty nice little area. There has been some pullbacks in here, but just like what we saw on the NQ, if it breaks through, it's not really grabbing too much. There's a little bit of a zone sitting right in this level. But for me, it looks like, again, price could continue to drop down. It looks like there's not that many buyers. Let me see over here. You can see the 30 minutes just a little bit lower. Yeah, about the same area. Here, I'll put a horizontal line so you guys can get a good kind of view of that one. Yeah, it's the same level. So to me, it looks like if we're able to break through this current zone where we are right now, right, this 2740-ish area where price is about that right now, it looks like price isn't really going to hit a ton of buyers until we get down to approximately here. Again, I'll change this so it's green. I know, whoops, not horizontal line. I know some people have a harder time seeing green. Come on, I gotta find it. There we go. I'm gonna change this actually to blue because I don't want you guys to take any. There we go. Approximately in that location. Okay. And again, check your settings. But again, you should be able to see a nice little pop and then a retest of that area. But for me, it looks like targets could be potentially down into the 2640 area if we're able to break below basically this 2720 area. So again, I would have to say right now, I am bearish minded. It doesn't mean that I'm not telling you guys to take a short now, but I am saying if there's a bit of a pullback, it looks like this is a position that I could be getting short in. Being 12 o'clock now, we'll see how much it's able to move. We'll probably get some movement around 2 o'clock. I don't know if we can clear that distance today. That would be a lot. I think this is probably more of a tomorrow thing. We may stabilize, maybe bounce back a little bit, And then going into tomorrow, this could be a potential short. But check it tomorrow morning first thing, potentially with that, again, 10 o'clock tomorrow, the reversal. Now, here's the Dow. Okay, the Dow also banged right off of that level that we marked last week. I had that in there. I thought I erased all those, but you guys can see it came off the same level that we had marked last week. This one did also not make it over the gap. Same thing. It's kind of pushing down on the 4-hour. The 1-hour that you can see, it is not actually sitting inside of a zone. There is a small one here and a small one, but kind of the same idea. And again, this is why it's important to not jump into shorts and longs after large movements in price. Had you done it here, right? Oh my God, we're collapsing all the way down. What did it do? It retraced. Big push down. Oh my God, look at this. It's tanking. What did it do? It pulled back. Went down, pulled back, went down, pulled back, went down, pulled back, and is pushing again. And we'll see if it's able to break this level. The goal is to get into pullbacks, and a lot of times you have to go to lower time frames to be able to do it. Here again, this was the pullback right here. This was the pullback trade. That one kicked in. That was probably super early. That was last night. That was a last night pullback, and then here's the one from earlier this morning about what time is that? 10 o'clock. Yeah, there's a reversal from this morning. You guys hear me talk about this before. The 10:30 time frame in the morning is a very popular retracement time. Look at this, going right up into this level of basing right here. And if you guys can see the time at the bottom, right, you can see that where is this reversal? There's your 9:30. There's your 9:45. There's your 10. There's your 10:15. There's your 10:30. And bam, there's your reversal off of the open, which occurred right here. Okay, so this is the exact textbook kind of reversal that I'm talking about in the morning. Again, we get some happiness in the morning, the initial trade, boom, they popped it up, they run to an area of supply, and then they get the reversal time frame. So it's good that was there. So we got some room to run on this one. I would say this one is in a similar situation as the other two indices. There's probably your target on this one to the downside at 22.46. Again, don't get blindly into it right now. It's actually pushing through the bottom. Wait till it pulls back if you're interested in getting short. We're halfway through today, it may also start to dry up a little bit, go a little bit sideways. So, look for a level of basing, look for any type of a pullback. And I would say that I'm also, just like the other two indices, I am bearish minded on this one as well. I see this one coming a little bit lower. All right. So let's jump over and look at the Aussie and look at the currency pairs. So Aussie has been more similar to what gold has been doing. Actually, this looks very similar to what the silver chart looks like. Gold is a little bit higher, but silver only made it about halfway back. And you can see on a daily basis, this has been pushing down. Now, you may not be a currencies trader, but you can still take this as a lesson in reading charts. One thing that I'm looking for is, look at this bottom down here. Look at this ATR, okay? ATR, if you guys are not using it, is an extremely beneficial indicator that too many people don't know how to use, and don't see the function of it. It's huge in Nadex. If you're not using it, shame on you. You should definitely be using it. It's almost back to what normal is. Obviously, when we had these huge candles with every single asset right now, things got crazy. COVID-19 was something the market was not ready for. We're almost back to normal now, so that's good to know. Looking at the 4-hour basis, you can see that, again, it's pushed back a little bit. It also looks like it's starting to push to the downside, although it looks like there's a little bit of a zone here. Here's what we got on an hourly basis. So it looks like price is pulling back, and for me, we're kind of in a holding pattern. I love the way that this price bounced right off of this level. I'm definitely going to have some alert set on this one, and I want to see what price looks like when it gets back down to this 62.24 area. It will probably start to slow down now until we get Australian news tonight. But at this point, I'm going to say it looks like there's some dollar strength coming, creeping back into these markets. There's going to be a little bit of a speed bump right in this area here, guys. And again, when you are a price action trader, things like this where there's large extended bodied candles, extremely important to understand. Okay, it's important to know where those are. That's a great example of it. Now, unfortunately, we got front run. We missed the short here. But again, that short was actually over in the Aussie yen. It was one that I took earlier today. So that's where we're standing with the Aussie dollar. Unfortunately, nothing tradable right now. Look, you can see that hasn't marked off. Aussie yen had a great little trade set up this morning already, this nice little pop. Now, this was a pop that came in. I don't know if you guys have Twitter or don't have Twitter. I'm not a big Twitter person, but when a certain individual in the United States makes some tweets, if you guys missed it this morning, Trump mentioned that he was going to backstop the U.S. Oil and gas industry, right? Well, that kicked in, coincidentally, right around the 9:30, 10 o'clock time frame. Now, this is why I'm talking about getting things on a pullback. Now, this one pulled back. This was a nice little, there's kind of what the trade setup was earlier today. Now, this zone is not valid, but this is an example of what I talked about. Look for areas where price explodes off. As you can see, when Trump made that tweet, what did it do? It spiked all the way up, went right into a level of sellers, and then turned around and basically came back again. And now it's kind of meandering sideways. So this was a very interesting trade setup. Looking at this on the larger scale, though, you can see that price has been unable to get back through. And this is a zone that we talked about last week. That's where we originally set this. This is actually where the gap basically bounced to on March 6th. March 6th is a very, very big day. It's where a lot of the market started gapping and collapsing. We're pulling away. We've now broken below the lows and levels of basing. There's basically targets in this one to the downside, sitting here around 66.75. It's at 67.63 right now. So almost 100 pips to the downside. And as it's pulling back, again, nice little kind of setup in this one. And you guys can see that one is all the way down here. It's marked off over down in this area. So again, look for good levels of supply to push this back down. One way you can play this as well is there was definitely a small area down here. Actually, I think it's probably better on the 30-minute. Yeah, it's probably better on the 30. Probably that area right there. So one way that you can play this as well is, again, what I call our hay powder. It's a momentum breakout. When we break through this level, this will all of a sudden become your level of risk, and you could be looking for shorts in this area. Now, Aussie yen is one of those pairs in Nadex that you can definitely play on the smaller time frames, but again, you can also do things overnight. This tends to move the most at during nighttime Aussie news releases that happen typically around 9:30. Unfortunately, we don't have one of those tomorrow. This is one of the weeks where we don't have a lot of Aussie news at night, but this is a great way to kind of play this. An example being, let me see here. Hold on. Let me pull it up on the other side here. Let's see. Actually, let me check one thing. That area is right around 67.27. Nah, it's moved a bit too far. Anyway, Aussie yen is one of these ones. Look at this one at night. You can look at some of the smaller binaries on this one. They actually give some pretty good risk to reward returns. If you've never looked at them, definitely check it out. And what I mean by that one is here. Let me drag a platform across. I know you guys can see this one over here. Okay. Pull that right up. These are all the different options. We have 7s, 11s, 9s, 7s, 11s, and then we have 2 hours in this one, and a weekly. So a lot of people don't look at this one. This is a good one to kind of trade, especially because the movement at night is pretty consistent, and because it has the yen in there, you get more moves during the day as well. So this is actually a pretty good currency pair if you guys are unfamiliar with currencies to check out, and that's kind of what we had this morning. So look for this. One of my students said before when I posted this level here, I'll move just a little bit. He's like, that's a devil's level, but can't change what the numbers are, right? We know what the numbers in there. So keep an eye on that one. Set a little radar for that one for yourself. Euro yen also had a similar pop this morning on the 30-minute. As you can see, this one has been pushing back down into daily demand. So it's been in the area that we've been watching. A lot of buyers have been coming off of this area when price is hitting. You guys can see it came down here, exploded up, came down again, exploded up, came down again, exploded up. But this is number 4, and this is where we've seen breaks in the past. When we get to that 4th touch of a level, just be a bit cautious because these things tend not to hold. And unlike prior touches and explosions up, this one has not had the big push. So it looks like this first zone is in kind of jeopardy of collapsing, okay? Now, is this because it's here, and I said, Brian, you said it was going to collapse. Should I go short? The answer is no, and here's why, okay? Obviously, we'd like it to pull back, and there's a pullback level right here, but what do we see underneath of it, right? Underneath of it, I actually can't see it right now, but there's actually a level sitting right below, okay? Right here. Guys, see that level right there? So the worst thing you want to do is sell into an area of buyers. That's a big no-no, and that's a big mistake that a lot of people make. This one right now, because it's kind of boxed in, has been a little bit more difficult to trade. There's 2 levels sitting there, and you guys can see, we can't see that lower level now, but we have this level of basing here, and you guys can see we've touched it a few times at this point. We could actually refine it and kind of bring it up into that level if you wanted to. But this is what I call between a rock and a hard place, between 2 levels. Now, this is a 4-hour. It is about 170 pips. On an hourly, let's see if we can get this a little bit better. Yeah, we can. Yeah, we can. I'll delete my zone, and you can see here we're getting it even bracketed a little bit more, okay? Interesting. So if this does move up, and let's see, where is this price level? This price level is sitting approximately 117.25, okay, in euro yen. And again, it may not hit now. We are starting to get late in the day, but this is an important level, okay? This is done, again, nice movement off, nice entry in. It's been respected. It's been tested right here. It's been pushed down. This one got front run, and this actually may be a turning point right now. But the nice thing about this is we have about 90 pips before we run into an opposing zone. Now, there is a small zone here, and that zone would be about 40 pips to the downside. Why this is important is because if you guys are looking across at the euro yen, even on a daily basis, these are about, what? About 20 pips difference on the strike prices, right? Looking at it on a daily basis, okay? This being 100 pips apart from here to here, we're talking about 5 strike prices. So it presents a pretty interesting opportunity. And you guys can see this one candle, this one spike right here was 83 pips. That's 4 strike prices. That's a pretty nice move. So it offers some nice potential. But the one thing I'm cautious right now, guys, is the fact that this one is getting into areas here where, again, you guys can see we've touched this 4 times and we have this level kind of sitting right below it. Makes me a little bit leery to be able to, take shorts in this position because, again, shorting into an area of buyer, not necessarily the best. But good thing is the ATR is coming back on this one. Looking at the pound yen. So the pound yen, okay, one of the things that I like about Forex Factory is the fact that I can put the scanner here and it's kind of right in my face, and it's showing me the pip change in 24 hours. Look at the dollar US. It's down almost 200 pips, and the dollar yen is down 200 pips in 24 hours. That's quite a big move. The pound is kind of suffering right now. And again, some of this is mentioned because of Brexit. Some of it has to do with oil. But as you can see, this one is more or less collapsing off of an area that we mentioned before. We can see that we had some sellers in here, and we mentioned this little level right here. All right, we mentioned this last week, and you guys can see what we bounced off of. It is now breaking all these levels, and there's not really a clean kind of area in here where I can say, hey, listen, there's a lot of buyers right there. That's a great, I can't really say that because there's not. So for me, it's kind of like, hey, listen, if we can get a good entry in this one, there's areas, there's some pretty nice areas here to get short this position. And again, the pound and trouble, is having some issues. Now, the indicator is marking this level off right here. I wouldn't quite say this is the best of levels. It's really kind of smacked through this level a bunch of times. I wouldn't be as concerned about that one. There's a smaller level over here, but really until we get back down to this spacing level, really kind of on this 4 hour, I don't think there's too much to see on the 30-minute. What do we got here? Let's see what we got. Let's see if there's anything drawn. Yeah, and that's about 86 pips. So the daily ATR right now is 136. So the one concern of whenever we get a move of 200 pips in 24 hours, you guys can see this is a large candle. Whenever your move in the last 24 hours is more than what the daily ATR is, a lot of times you're expecting, we'll expect some type of a retrace or some type of a pullback. So any position that you would potentially get short in this one, you need to have it go back to an area where we can get short. As you guys can see, it already even had a pop here on the hourly. So we need to find a good level to be able to get in on a pullback before we get short. You don't want to get short at the very, very bottom, especially after the move that it's had today. So, it may be a little bit lower that we want to go, somewhere down in here. Now, this one is not a touch bracket based pair or a knockout bracket. This guy is, okay? So I'm not even going to tell you how many brackets have been broken to the downside on this one at this point, but I told you guys last week to get in there and try some of these touch brackets. Try it in demo mode to where it's a little bit safer of an area. And as you guys can see, last week would have been the 7th, which is right in this area, right? Now, we had marked off a level and said, hey, listen, go check that out next week, right? Here's where we ended the week, right? Right there is the 13th, right? Actually, today's the 21st. So here's where we were last week. We mentioned that we were high. Here's the movement to the downside. And again, if you're not looking, this is 390 pips to the downside. Do me a favor. If you're not familiar with touch brackets, if you're not familiar with currencies, and if you've never looked at these before, go over there. And what I want you to do is, let's see, where did I put it? I want you guys to do this. This is your homework for next week. I want you guys to go down here. I want you to hit touch brackets. I want you to click on Forex, and I want you guys to grab the pound US, and I want you guys to look at what the strike differentials are on these, okay? Look at the movement in here, and I want you guys to see how many of these touch brackets were broken last week based off of that daily level. Remember, if you're not trading touch brackets, the biggest benefit to a touch bracket, besides obviously having the filtered and stop loss and the limited risk in there, is the fact that you have duration, you have time on your side, right? Well, I don't know what the touch brackets were from last week, but as you guys can see, right, these are, you guys can see how far apart these are, right? You guys can do some quick, simple math, right? 250. This moved almost 450 to actually from where we were last week to now, it's 390 pips. So almost 2 complete touch brackets to the downside, and it basically happened in one direction. So just because you guys are unfamiliar with it, that's why we have demo mode. Go over there and try these things. And now Now we're starting to see it come out to a daily in an area where we have buyers. So is it time to switch? Is it time to reverse? Maybe, maybe not. Be cautious with it. But last week when we were sitting there higher in the curve, we had pushed all the way up. We'd been in an area of sellers. That's more of the opportunity to do it. Now, is this a bad level in the 4-hour? No, it's not. Here we had a nice push. It really kind of stopped the down draw, and it kind of created that next rally up. Here, if you look farther left, you can see, hey, listen, last time price was here, it went higher, went higher, went higher, went higher, and had higher low, higher low, higher low, higher low. That means we are definitely, there are buyers sitting there, right? That's the only reason why price didn't continue to fall in this red candle, is because buyers stepped in and pushed the price back up again. So this is not the first test. I would say that the level is probably more sitting down here. And again, we could probably draw it. Probably there is probably the best bet. And again, check your own brokerage software, but potentially down in this 121.85. That's probably a better area to kind of check these things in. But again, if we can get in there, there could be potential call, really potential call spreads or touch brackets in this pair stepping in, right? So interesting setup on that one. So going across the euro pound. Euro pound has also had a rough day. This one is up 100. You guys can see this on the hourly. This is kind of a rough day for the pound, right? Yeah, much more than we normally see. Again, quite a large bounce, and this is a level that we talked about last week. This 86.66. We just missed it. It ended up bouncing a bit before, and again, people are surprised at these kinds of things, but that's what happens, right? That's what happens. You'll get front run sometimes, and you guys can see that the indicator actually gave us a base in this one. I think we can see it on the lower time frames. No, you actually can't. This is where we had our levels, and we mentioned last week, hey, listen, if we can get down here, this is a pretty nice little buying zone. We missed it, unfortunately, and it took us away. So, should we be looking for a retracement? Yeah, probably. There's a little zone right here that I think is not horrible. It's just slightly above where we are, and it's pulled back a bit. Looking at it on an hourly, you guys can see the indicator actually pushed it a bit higher, and I would agree with the indicator, so we'll delete ours. The lower time frame actually gave us a little bit better withdrawing, right? You can see the price had rallied. It based, it ran out of steam, and then the sellers came in and just slammed this thing down, right? That's important to know. That level is sitting right up there above where we are. So interesting ways you can play this. Now, this is about 60 pips away. The daily ATR is 72. So we're about a day away from that level. So it may not trigger for you guys today, but what you can do is you can set an alert, and depending on what software you're using, it doesn't necessarily matter. Right here, this price level right now is what? 88.90. I mean, you could set this up at 88.90, set yourself an alert. When the price hits that level, send yourself an SMS or send yourself an email and come back and check this out. Depending on the time of day, you have a couple cool options with Nadex. Now, I like that level for a short, but I want to make sure that I keep my risk low. So, unfortunately, Euro Pound is not over here for touch brackets, but again, we have some call spreads that we can trade. And again, it's not for today, but if this was up at that 89 level, you can see that that level's up at 89.00. When we get closer, these will have new touch brackets. But if you can get into something around that level and keep your risk low, that's a great way to use a call spread. Take a small risk on it. And again, this is, like I said, it's a bit hot. This level's a bit higher. Getting something in here would not be a bad little trade. Not now, obviously. We need to wait till it goes higher. But if you can get something a little out of the money, that's a nice little trade setup. And again, depending on your risk profile, if you like it, if it matches your risk level, go ahead and take it on your own accord. Not because Brian said so, but because you guys are, it's based off your strategies. But I do like the fact that it's a very small risk level. It's only about, again, in spot currencies, it's only about 13 pips risk. That's an acceptable risk level for me in the currencies market, and it matches up very, very well to what we see in Nadex. And after this big push up, you can see what the standard candles look like. This is a very, very explosive move. You'll typically get some type of a pullback. And again, that's what we kind of see up in that level, in most cases. And again, we had it off the bottom as well, this big push down, and it bounced off of this level. So kind of matches what the strategies are. Now, euro dollar. Euro dollar in a 30-minute, we did not get back up to this level at 108.90. Kind of the same principle. We're kind of consolidating on the daily. As you guys can see, the highs are getting lower, the low bases are getting higher. So we're kind of coupling in, and on the 4-hour, you can see it's really kind of flat. I wouldn't say that this is necessarily a trending market. On the hourly, look, you guys can see how flat it is. I mean, I'll make it look like it's really exciting, even though it's necessarily not. And there's your 30-minute, right? There's your 30-minute. We kind of have a top and bottom, and these have been here more or less since last week. Kind of the same thing that I mentioned before. When we were high, we're looking to sell. Obviously, this zone has been respected. It's been hit twice before, so it has a little bit higher of a chance of failing for the next one, but I think if we can get back up top, I think that's good for another short as well. Same thing. This is a touch bracket based pair as well. Obviously, we're a bit far from it right now. Let me see here. Let's see if any of the touch brackets match up. I love looking at this, especially with these. And I will admit, when I first started with the touch brackets, I was like, I don't know. I couldn't get into. They were call spreads for me, right? They were call spreads for me with limitations. But the more I've really started to kind of mess with them, the more I like it. And we're looking at 108.90 area. So there's nothing necessarily high here. I think when it goes up, it'll break a couple levels coming through. But 108.27 on the downside. Yeah, we need these to break to the downside. So when these come through, this 10, let's see, we're not gonna get that close to these. 108.28. Actually, this would be the one we'd be probably closest to. That or this. Let's see, where are we at? 108.12. Yeah, that's probably not horrible. Yeah, there's one or probably this guy right here. For this to touch this level at 108.22, it'll break the bottom side of this bracket because this is 108.28. So we're about 6 pips shy. Not much we can do about that, unfortunately. But that may break and then actually give us a little bit better of an entry on that newly printed bracket. Again, these are based off a weekly basis. We may have to actually jump over and look at these on a call spread basis too when we get down there. Again, set yourself an alert to the downside. That's probably the easiest way for you guys to do it. Again, you have to learn how to set alerts. Set yourself an alert approximately, and again, I know you guys can't see those lines, so I'll bring this up, probably around this area. What I would do is I would set an alert 108.32. That's probably the cleanest level. And then same thing, set yourself an alert probably, let's see, if that's 108.90-ish range. Yeah, set yourself probably over here, probably 108.75-ish. Yeah, I'd like to see it above that level. Those would be the best two places to set some alerts if you know how to use that in the the charting software there you use them. And then take a look at it, kind of see where we are. Again, you have the options to go into binaries or call spreads. It looks like the touch brackets are not matching this one, but they may break some of these brackets and we may get some new ones printed before we get price up there. So that may work out. Ideally, again, if you guys are night owls, look to trade these between typically around the London Open, and then if not, between 8:30 and 10:30 in the morning. When the U.S. traders are coming online, these two tend to have a lot of movement as well. So keep those, keep those two levels in mind. Again, up there and here, 108.89 to 108.23 would be the two areas I'm looking for. Dollar CAD. So dollar CAD supposedly got hammered yesterday. I saw a bunch of news releases. They're like, oh, the CAD's being crushed because of oil. It was okay. I mean, yeah, it's a bar, right? For the day, it was up 129, but the ATR is 147. So it didn't really get crushed as much as the media would have us believe in this case. It's okay. I mean, yeah, it was an up day, but it wasn't really the biggest up day I've ever seen. The ATR is finally coming back down on this pair. On a 4-hour, you can see that there really isn't much level-wise. I mean, obviously, we had the lows here. We broke below here, but we got some room to run on this one. Unfortunately, the CAD has been a little bit weird to trade because, the U.S. economy does well, but then, obviously, oil collapsing through the floor. The dollar CAD is a proxy for oil. And you can see even on a 30-minute, it's just kind of, levels are, it's printing levels, but just not really doing much on the top side, So, at this point, it's more or less stabilized itself. This would be one to watch tomorrow morning for the oil release. If the surplus numbers are high again, this is going to pop. Unfortunately, the CAD is so dependent upon oil. That's their main export. That's where they make most of their money. My father-in-law actually used to work for Chevron in Vancouver, and yeah, they're really dependent upon oil proceeds. With oil as low as it is, we don't need to pump. They're not generating, things, and even the refineries aren't necessarily running. So, dollar CAD is an interesting position to watch for tomorrow morning. What I would do, the way that I would play this, it's a little bit too early now, is tomorrow morning oil releases at 10:30 in the morning on Wednesdays. If there's a holiday, then it gets bumped back to Thursday. But tomorrow it's going to be 10:30 in the morning. What I would do is I would get up probably, again, start looking at charts, looking at this currency pair or looking at the oil chart between, I'd say 8:30, between 8 and 9, okay? Start to see where the U.S. market is pushing oil. A lot of times the market kind of has an idea what the number is going to be, like how bad it's going to be. Price will move about a half hour before the oil release into a supplier demand zone. And that typically gives us a little bit of a hint of where oil is going to go based off of the news release. One of the things I do like about Nadex is the fact that whatever our cost to get into a position is the most we could possibly lose on it. A lot of times, and a lot of my students do this as well, is if it drives into a zone on the 30-minute, jump over and start looking at some binaries, whether it be in the dollar CAD. And again, remember, this is not a currency play. This is an oil play. It just is a proxy through currencies. But look at some of the binaries on the 2-hour time frames, because what happens is the strike differential is smaller on the 2 hours versus the dailies. And most of the movement happens in the morning anyway, particularly, again, remember, 10 to 10:30 is the reversal time. So oil being at 10:30 is also right around when we have a reversal in the markets. A lot of these things are all kind of factoring in all at the exact same time. You can grab a 10 to 12 binary in the morning, closer strike prices. If it drives into an area of supply and demand, you can control your risk down to a very, very small level and not actually need a very huge move to be able to get 2 or 3 times your profit based off of what your lower risk was. So it's a little bit kind of a complicated formula. Hopefully you guys got that one, but if you don't, make sure you guys keep following these sessions, and each week I'll kind of, you'll pick it up. A lot of my guys at night, they're like, oh, I got it. All right. But that's a great way to play news. If you guys are not playing news, again, this is a way to play it if you're kind of scared of the oil market. All right. Looking at dollar yen. So dollar yen on the 4 hour, you can see we're kind of bracketed in. We marked this level off last week, and you can see it's actually the range has actually even shrunk. On a 4 hour basis, or no, I'm sorry, on an hourly basis, there's that zone we marked off. The indicator did grab it. Here you go. Check this out again. What time did the reversal kick in today? Again, we had this kind of hiccup around 10:30, but it basically just stayed the same. I think on the 30-minute you can see it. Yeah, right here, right there. You guys can see there's 9, there's 10, there's 10:30. What did it do? And then boom, came back down again. Right. So it went up. It kind of stabilized at the 9, 10 o'clock frame, and then it got pushed down before it rallied. So I actually like both these zones. I think there's 2 good zones up here to be able to take shorts off of. It is consolidating. Don't expect huge movements out of this pair right now. This does more or less kind of mirror what we see in the indices as far as kind of movement goes. You know, they tend to move in similar type movements as far as strength and weakness. Not necessarily in the same direction, but the same type of moves. When they move, this moves. When they aren't moving, this is not moving. But there's some smaller time frame. If anything, if we get a bit higher, right now I wouldn't do anything. If we get a bit higher, I mean, we're only talking about moving about 16, 17 pips. There are probably some shorts. Of these 2 zones, though, this is the more aggressive of the 2, right? Obviously, it's closest. The second one up here is probably a little bit better. Like I said, I like to keep my risk as low as I possibly can. The top zone's probably a little bit better of a zone. If you're an aggressive trader and you're, not as risk averse, you could potentially take it off the lower one. Again, profit targets you guys are out by this 107.30. Last time that price was down here, it definitely respected this zone and caused a big move off of it. So we have to assume that there are some buyers sitting down in this level, okay? Now remember, if you're gonna take these shorts, make sure that it matches up to your strategy and your risk. I don't want anybody to email and say, hey, listen, I got short that because Brian said so. No, we gotta see what it looks like when it approaches the area. We wanna make sure it doesn't base before it gets in that area. But like I said, this is not me trying to predict what happens in the future. I'm seeing it on an hourly basis here. The last time the price came up to this level, it didn't even make it up before sellers came in and hammered it back down again. The last time it was up in this range, right? Actually, it's a little bit higher, but the last time it was here, it tried to rally, got slammed down, came up, slammed down. Here, slammed down again. Now, it will eventually break, but between these 2 levels, to me, I'm going to have to look at this, and I'm not using, it's not a gut feeling. It's I'm trading and I'm saying what I see. I'm seeing that when price was there, a seller stepped in and drove this back to the downside. It's not taking averages or magical percentages. I'm just showing you guys what I see, okay? Dollar Swiss. So dollar Swiss, this is a great trade this morning. Look at this. This is the hourly. You guys can see right here. Again, this is at 9 o'clock this morning, right? Oops. I thought I changed that to blue on this one, but probably not. You guys can see, look at this move up. Now, this is an hourly zone, and this is what I'm talking about. What happened when the price was here last time? It got slammed down. It was unable to get back. It got close here. Last time it touched, it got slammed down, and these were targets that we drew last week. I told you guys that here was the front end, here was the side. There was our kind of entry area. It got slammed down. What happened again? It touched that area. The same seller stepped in that did not have orders filled, and it got slammed again. Now, it's in the middle of the zone right now for me. Okay, so I do not have a trade set up on this right now. And the big question is, let me see, can I refine that a little bit on the hourly? Appears no. I was trying to see, whoops, hold on. Let me go to the hourly. Let me see if I would like to box this area off and see if I could refine this zone just a little bit on the 30-minute and see if we can get a little bit better of an entry in there. Nope, because it's bracketing that candle off, unfortunately. Yeah, we're gonna have to use that one. So You guys can't really see this here. I'll move these over here this time, make it a little bit easier for you guys to see. But basically, this zone is sitting there. It's gonna block it. And there's the bottom side. Let's move this out of the way. Save that. So there's where we're able to see that zone. Where are we talking about? 14 pips in this one. So not necessarily a bad zone. So next time it comes up there, what I would do, again, look to the call spreads, look at some of the binaries, and look to see what time it actually hits. The time a level hits does matter. When the zone is formed, obviously matters as well. We don't really have any U.S. news today, so in the next 5 hours, if this grinds up into that level, probably not a whole lot we can do with this trade. We're going to be running out of volatility. You know, the volume would be drying up. It's the end of the day. We don't have U.S. traders. Nobody's trading the markets. Trump will talk later today, and that will obviously move this a little bit. Again, the Swiss is sensitive when the president is speaking. That's an option up there, okay? Now, NADEX is obviously closed from 5 to 6. If price is sitting up inside of that range at 6 o'clock when prices do open back up again, you do have a couple different options on this one. Again, kind of beating a dead horse, but look what we got sitting right here. We do have a touch bracket. You do have call spreads and you do have binaries. So there's 3 different ways actually to play the dollar Swiss. Not sure. I was kind of surprised that the dollar Swiss did make it into the touch brackets. I think a couple other pairs should be in here as well, but the dollar Swiss is there. And I think this one, let's see, see this 107.25? This 107.25 just happens to be the very, very tail end of this zone. So this 107.25 gives you, again, if you feel that you agree and this could be a potential short based off of what happened in that area previously, there are ways to get low risk with a touch bracket that is just slightly above this range. Remember, the zone starts at 97.18. 97.25 is where you get knocked out of this one. So the inherent stop loss in there is relatively small. What you can do is you can wait till you get in this area. There are many different confirmation patterns that you can see that shows you something is going short. So if this zone holds, right, and does not break above 97.25, this touch bracket is valid as a potential trade for you. Get a confirmation that it is not going to continue going higher, and then you have a potential short here with low risk. Right now, because we're far away, obviously the risk is bigger. You know, you're taking, you know, you can't get into it now because, again, your risk level is what, that much right now? But if we're able to shrink that risk here, right? And again, let me put this, let me put these lines over here. 27.25 is right there, right? Where that line is. There's the level of risk based off of if we wait to 97.18. Okay. So again, that much risk is much, much better getting in close to the ceiling on this one. Again, get a confirmation pattern. It may continue to push up through, get broken through. We don't want to jump in too early. Get the confirmation of a switch. Again, there's a potential trade on the dollar switch. But again, make sure it matches your strategy as well. Don't take it, because Brian said it's not a valid trade strategy. But I do like that based off of what we've seen in the past when prices come up to this level. This is a very nice move to the downside. Very explosive, very explosive, very explosive. We may be good for one more hit, maybe not. We'll see. With that being said, let's go over, and I'm going to do gold, silver, and then I'm going to cover, and I'll end on oil. Gold, I told you guys last week I was more or less bearish on gold, right? I just did, there was no reason for it to be up this high. You know, they mentioned stimulus. People are like, oh, inflation, inflation, inflation. Here's where we are right now, guys, on the 21st. Here's the 14th last week. It's done nothing, or actually, here's the 14th, this high. It's done nothing but go straight down since that time. With the economy not being good, inflation is not necessarily a concern. We can print all the money in the world, but if everybody's in a bad situation, nobody's raising prices, there's no such thing as inflation. We're just trying to pay our bills at this point, right? So for me, again, you got to take some of the fundamental aspects of this and stop listening to the media hype. Now, lowering it down and kind of seeing where buyers and sellers are on the market, you can see we had a pretty big drop this morning, right? Backstopping oil sent this thing straight to the downside. You guys can see there's big movement right down, right? But on the 4-hour, we did run into an area where we had buyers previously, and that bounced it all the way back up again. So gold has been pretty interesting. It's been grabbing these levels and really respecting these levels. This is a pretty nice little zone up here. And actually, this zone initiated and originally started back here. And you can see we've hit it here, we hit it here, we hit it here. That level for me in gold, and I don't trade gold tons, but that level is sitting here around 1697.25 for those of you that are gold traders. We also know that the level down here has been respected as well. So be cautious in any of your gold positions. This is down here at 1662. Now, gold, I've had mixed responses. Again, this is just my strategy myself. I haven't done as well with binaries on this one. I have a student that absolutely loves binaries on this one. For me, spreads have worked out a little bit better for this one, the commodity call spreads. Just my personal kind of trading style where I've gotten in. I don't know. Try both if you guys haven't. But like I said, a lot of people are so stuck on just binaries. Remember, you have call spreads and you also have other things like touch brackets. Now, there is a touch bracket. I actually have, I'll be fully honest, I have not tried a gold touch bracket yet. I do have a student he's been doing touch brackets all week, but he hasn't placed the gold one yet either. If you guys do play a gold touch bracket this week, do me a favor and email me and let me know what your experience was and how you liked it. Okay, so I haven't done it. There's only so much time in a day. I can't trade every asset at every time. But some of the gold touch brackets in here right now, right? It looks like a lot of these are sitting above where we are, but bottom side, this zone is hitting at 1662. We actually have two, a 1666 and a 1665 around that same level. And you can see this one actually pretty nice kind of move to the top side. So had you got into this one before, yeah, there's a nice little move off of that 56. Actually, the 56 level comes in, what is it, 1656? For me, 1656 is sitting right there at the very, very bottom end of that zone. So there was a nice little gold trade. If anybody actually traded that gold touch bracket, they had a pretty great day. I didn't trade it. None of my students did. But again, this is why we need to look at multiple things. You can only do so much, unfortunately, at one time. So that's where we're at with gold. For me, I'm still bearish gold. I think it needs to break through this level and the next level where we're going to have some buyers kind of come in. Need to make sure we have some profit targets is down here at 1644. Last time price was here, it had a hard time breaking through. There's a bit of a wick over wick here and price exploded off of that level pretty good. That's got to be something you watch to the downside. All right. Looking at silver. Now silver, yeah, I feel bad for silver. Silver's been having a little bit harder of a time. On a daily, you can see gold is all the way back up here and silver has been unable to push down. Here is that level that I keep telling you guys. It's been a nice little level. That's where the turn was. Again, I mentioned last week, I'm bearish silver as well. Here's where price was last week. We were literally going into that zone last week, and it's done nothing but go straight down since that time. Lower time frames as well. This one's kind of been a little bit, it's weird. It does nothing. It's very, very choppy, and it's very, very sluggish, and then we just get these explosions to the downside. You can see couple of these levels, a couple of the pullbacks have actually been pretty well in it. I found of the two, gold is being more reactive to the market. Silver is kind of delaying. But of the two, if you're going to get a bearish position, if you're getting into a bullish position of these two, I feel like gold has been the better one to get into a short-term bullish position. If you are bearish, I feel that of the two, I feel that silver has been weaker and it has been a better bearish trade. So the better bullish trade has been over in gold when the setup presents itself. The better bearish trade has been in silver when that presents itself. Currently, right now, I don't really have much on either of these two. These have been early morning traders. That's where most of the movement is happening. You guys can see it literally bounce right off of that this buying zone. Let's see what that looked like. Yeah, you guys can see right here. Look at this. Price came across, it pushed down, and then boom, that's one of the largest candles, and it wasn't able to get back to that level. It's a clean level. So that would have been a nice little profit target this morning. All right. So let me go to gold. Let me go to oil. So oil is obviously going to be a little bit strange. So let me explain. First off, this is ECN data here. So unfortunately, my data is not going to be the best. What I'm going to do is I'm going to bring a chart in from Daily FX. Okay. I don't know if you guys are familiar with Daily FX. It's another site that IG is actually the owner of. The chart is going to be strange, right? You may look at this chart and let me see it. Can I pull it out and make it a little bit better? You may look at this chart and say, how does this make any sense? How the heck can this go negative, right? I mean, it's the first time in history, right? What the heck is going on with oil, and why do I hear so much about it? Like, it's negative. Were they paying me to take oil? So here's the thing. The way that the media is presenting this, that oil was at zero, okay? Oil is traded in the CME on the futures market, okay? Oil is difficult to trade right now because this data is based off the May contract that expired today, okay? That contract rolled over, and this price data is based off of the June contract that everything got switched over to last week. So this contract was up at 22 last night when this one was at negative data. So this is kind of weird. I'm like, oh, wait a second. Well, yeah, you couldn't have traded this. This was kind of something that you would have done last week in the futures market. So here's the situation with gold. The reason why it was collapsing is because the coffers are full. There is nowhere to put oil. And when you have contracts that need to be delivered and nobody wants it, you're just trying to give it away to get rid of it, right? Because it has to be delivered somewhere, and I don't have any room for it, so someone else has to take it. Listen, the situation with oil is this. Our strategic reserve is almost full. All the storage facilities in Oklahoma, everything else, they are full. Okay, if you want to read more about oil, again, go to Daily Effects. There's a lot of story down here that's talking about market sentiment, negative crude oil prices, the historic, great website to be able to go and get information if you're not used to trading it. Okay, a lot of information. Look, oil tumbles, serious implications for the likes of the S&P 500. A lot of great news, right? Here, it pushes below then. The problem is this is a supply and demand story. With the economy where it is and people basically unemployed, we're not driving cars. Like, think about it. If you were following your stay-at-home order and you were not working, how many miles have you put on your car in the last 30 days? Probably not much. Now, it is cool to fill up your tank of gas for less than $10, but once it's full and you're not driving anywhere, you're not really using it, right? So until the economy flips. Now, it's great that cities and states are talking about reopening select businesses and what the reopening plan is, but until it actually opens, demand will not come back into the market. Okay, without demand, there's nothing that justifies the price that it does. Now, I was joking last week that oil can't go to zero, but it's going to try really, really hard. I was wrong. Oil actually went to zero, but that wasn't the actual tradable oil. It's just that they were trying to remove the deliverable contracts. All right, so be careful what you see on oil. And if you're not an expert, oil is probably, it would be what I consider kind of like, not the snake pit, but it's a dangerous asset to trade. You do have the ability, and again, if you guys are unfamiliar with oil is one of those things. There's a lot of things. Let me see, where the heck is it? I lost it. I'm gonna have to open up another window. Oh, is it over here? Hold on, let me pull this one back in again. Yeah, I had the right one. There's a lot of ways to trade oil if you're not familiar with doing it. Okay, a lot of contracts in call spreads. Okay, there are a lot of commodity binaries on this as well as you have touch brackets. So remember, risk should be the first thing that you're focusing on. In a market like oil right now, if you're trading it, where we've never seen this before, we've never seen something go, negative before, use caution. Okay, use caution. Does it mean that there's not money to be made in oil? No, that's not what I'm saying. What I'm saying is if you're unfamiliar with the market, your first focus should be risk. Nadex contracts do basically limit your amount of risk to whatever you get into the trade. So with that being said, if you do find a setup, be very, very cautious with anything in the money because your risk is very, very high if it goes against you. And even at the monies, the risk is higher than if you're using a little bit more out of the money. So that's just my personal recommendation. Keep your risk low if you're going to be trading oil, but there is money to be made in oil, particularly when you start dropping into some of these lower time frames. Now, all the data is going to be, again, all the data is going to be on the new contract for June. Start looking for levels to establish. A lot of the downward movement today in oil is based off of what people read yesterday for a May contract that's not even trading. Okay, when we see the surplus numbers tomorrow morning at 10:30, that will obviously affect and that will obviously change what happens in this oil chart. So as I mentioned yesterday, or this earlier today, the secret to trading this one will be tomorrow morning between 8:30 and 9 o'clock when U.S. traders are coming online, when the futures market is opening up. See where oil is trading, see where price is being pushed, and do kind of what I do on these regular charts. Go up to a 30-minute level and see is oil, and again, this is not correct, this is based off of ECN data. See if it is pushing into some of these 30-minute zones ahead of time. And then the way that you play it is look for maybe a binary that's a little bit farther out of the money to keep your risk low in demo mode until you've done this a few times successfully, and then see how that plays out. Because a lot of times what we see is price is driven into a level, right? Price will be driven down low so you can get it on sale before the news release that jacks it through the floor, right? I mean, think about it. If you're buying grapes in a store, you want to buy grapes when they're really, really high priced or when they're on sale. You want to buy it when it's on sale. So a lot of times we will see price driven down and the number's good, and next thing you know, boom, the price skyrockets. It's a great way to play Netix. All right, so I'm going to leave us with that. So with that being said, let's switch back over to the slides. We'll shrink this down. So last but not least, okay, the COVID assistance. Let me give you guys the update. For those of you who don't know, again, I can't sew, I can't knit. I am not a healthcare worker. I don't work in a hospital. I'm actually scared the heck of needles. But what I can do is I can give education away for free. So the last 2 weeks, I've given you guys a coupon code that gets you 2 of my classes. Actually, you get 1 class, but I've given you 2 options for what you can get. I gave out 40 of these total. Here is the status. Right now, there is 3 left of the 5-minute binary course and 1 left of the course that I just released on Friday, the high volatility trading. I'm very proud of this one. I've gotten a lot of results back, but this is basically how to trade Nadex in times of high volatility, not only COVID-19, but news releases and anything else that there is any type of crisis mode. Great class. There's only 1 of those left. So what you need to do is hear the 2 words. I'll give you both for anybody that is new today. If you've already gotten one, don't go get a second one. If you are new, congratulations, you can get a free class. Doesn't cost you a penny. I don't email people. Don't worry about it. Nadex, and then or they're combining with options for my 5-minute binary course, or Nadex with volatility to get the second one. All you have to do is go here, this website, the bit.ly KTS class, go to all courses, or click all courses over here. All you do is go to one of these 2. It's no longer in pre-order. You can get the class. At the checkout, literally type in or their Nadex option, Nadex volatility. You will see that it'll take the course. The coupon code will be discounted. You will get it for 0, and then enjoy the course. If you have any questions, again, that is my way to say, hey, listen, I hope I can help you guys, give you something to do. Stay at home. Don't go out. Don't go anywhere else. All right. So again, screenshot this if you want. bit.ly-KTS class is how you get it. And then what I want you guys to do is make sure you're registered for next week's webinar as well. Tuesday, I can't believe it's April 28th, 12 p.m. Eastern time. If you have any questions, you guys are more than welcome to message me at any of these websites. You can go grab those classes, Instagram, Facebook, check out YouTube, Discord, email me at support@keeptradingsimple.com, and that's it. Hope you guys have a great trading week. Thank you for attending today, and I will see you guys next week. Take care.